Hello, fellow traders. 'Tis I, the Rumpled One. It is Friday, September the 14th, the year 2018. Let's talk trading weekly wrap up. And I hope you had a stellar week of using good risk and money management. The euro yen, as you can see here, it touched the previous month's high and has now fallen out of the wick zone by about 16 pips. So if you're playing that monthly wick zone, you'd be up. On the weekly, you see here once again it broke free. Right now, if you're still riding the trade, you could be up 64 pips with a potential of over 100 pips, I do believe. There is something though I want to show you on dollar yen, because I noticed it's popped over 105. If you take a look here, you see it hasn't broken out of this wick zone yet, and it hasn't touched these yet. So how I analyze this situation right here, when it gets up in here, this is where I'm going to start to think to short. Now if it gets up past this one, then we're going to see if we're actually going to have a breakout or if it's going to just come back down. So then if you look at the daily, you can see here red, green, big green with the follow through. And I'm also going to look for price to retrace back down into this area. This big candle is kind of the giveaway. You see this big one right here? You see how it took it a couple of weeks, but it retraced back down through this candle. So I'm looking for the same thing to happen, this pattern to repeat itself. So we looked at the monthly, euro, yen, looking at the weekly. You see this big candle here and this other big candle. Once again, looking for a repeat. Now, it might take a while, but I'm looking for that. Same on the euro yen. You see here, we broke through. Now we've come back out of that wick zone, which we'll see in a minute. You see here kind of an anemic Friday, 56.32. Once again, I think you can understand why I finally made that switch, even though I still trade the dollar yen, because I've been trading it for so long, it's almost like looking at the back of my own hand. And here we go, showing the buy zone. Now, once again, we've only got 57 pip range, but 57 pips can't fit within 20. So you see entry, profit, entry, maybe a scratch, entry, profit, entry, maybe you took a loss, maybe you hung in there, maybe you scratched. And here, unless you were a pro trader or experienced trader who experienced buy zone trader, you may or may not have taken these entries when the price reached the sell zone. You know, I called it the buy zone mainly because when in stocks, when I first started, I didn't know about shorting. I really didn't. It wasn't until later. I think it's my friend, trading buddy over the internet, Wild Super, who introduced me to shorting. So that's why I called it the buy zone, because this is where I buy. It really should have been called the trade zones, but that's okay. Sometimes a name just sticks. And you can see here, not much of a separation between the rat zones, but price still, the rat reversal or turn trade here still works. Let me just go back and reiterate something here. Now, remember, a turn trade is a red, at the bottom is a red followed by a green. And then you want to take that next candle, the same, in this case, it would be to the upside. So you see here, put in a low, red followed by green, and then you take the next candle long. Now, the difference between a turn trade is you usually jump in right at the open. You might take some heat, but usually you can get some upside out of it. But doesn't have to be, I'm sorry, that's a turn trade. Now, if you wait for it to break the high of the green candle, that's the rat reversal. Okay. And then the next candle would just be continuation. So you get the turn right here. This is the turn. Actually, we kind of call this candle the continuation candle, because if it turns, it has to continue. But the red green at the bottom or green red at the top, you see green red at a top, then you can either take the turn or the continuation. That's a pattern that once again repeats itself. And remember, you cannot have a big move off a top or off a bottom unless you see a red candle followed by a green. It's basically impossible for that to happen. So once again, when you get in these turn trades, off a top or off a bottom, that could be the one that bags the most number of pips. And so you see, you can do this just looking at the candles. You don't need any other indicator at all. None. You can do that with a naked chart and just look for that one simple pattern. So red, green at a top. I'm sorry. Green, red at a top, red, green at a bottom, and that's it. I mean, you can make a living off of that. That's it. And it doesn't matter the time frame. It doesn't matter the instrument. Now, some time frames work better than others, and you need to know what you're up against. And that's why look at the multimeter. So on red days, you have to remember red day means price is already below the open price of the day. And a green day, price is already above. And you don't know if it's going to turn and turn colors. So you can see here on the 4 hour, red followed by green. What happened? Green followed by red. You see it's coming down. You know, this eyeballing it. You can just see here, same thing. Now in this particular case, it didn't do a rat reversal. So then it made a new top, green, red, and then here, boom. See, if you get the break of the rat, that usually means you're going to get some pips. And I can see we had a missed pivot. We had such a big day, big run yesterday. So turn trades. And once again, we missed that pivot. So you see, we're stacking up some missed pivots right here. And I would look for those pivots to be taken out sometime next week. I mean, we have enough time. We could take out this pivot today, but the way price is moving, the small range, I would look for it to get taken out next week, possibly on the open. Price action. I mean, you can think of price action almost as a way of indicating a turn trade. You see here for the day, red, green at the bottom, there's a 1 ball. So you go green at the line. Here you go. Green, red, see 3 at the top. You go red at the line. Now we've got a 2 ball at the bottom. And the one thing about the turn trades is you have to let the candle close for the most part. So in this particular case, it could be tempting to jump in, but as you can see here, right here, if you didn't let that candle close and you jumped in, chances are you took some heat. And then maybe you either took a loss or you had to scratch that trade. Okay, so actually here, you let that candle close, comes down here, it starts to come back up. This is where you should have exited. Then here, you got another opportunity, put in a new high, green, red. Let that candle close. You see here, you may have taken some heat, may have stopped out, but then you come back here, it turned red. You see here, cross the line, and there was money to be made. Same thing here, turn. Let it close. Yeah, you could say, well, I coulda, woulda, shoulda, but if you're just playing that turn, just wait for that pattern. Let it close. It's 2 hours. That's an hour. You're going to have to wait. Once you see it, wait to the end of that hour. Then you can get in a trade. Don't try to be greedy. It's going to give you enough pips as it is. And maybe it doesn't sometimes. Maybe you actually take a loss. But there's no need to rush the trade. You just sit back and wait. Wick zone, price doesn't like staying in the wick zone. You can see it there. Popped out a bunch of times. 1, 2, 3, technically 4, and 5, 6, 7, 8, 9, 10, 11, 12, 13 times it popped out of the wick zone. There was money to be made. And here we've got the holo setup. Right from the get-go, you had the highest open. Once again, you know, bull candle, bear candle. Same as red, green. I just made this screen with the black and white candles. Got tired of looking at red, green, if you want to know why. That way, sometimes if you change the candle colors, it'll slow you down because your brain's used to, oh, red, green. No, let's just do black, white, or do pink, blue, or something. Then it'll slow you down just a bit, make you think, and you're not going to miss the entry because you slowed down. What you'll probably do is not take a bad entry. So in the inventory reduction bars, you can see we have a couple of long triggers. There's another long trigger put in, one short trigger that paid off for a little, once again, a little handful of pips. And trading the previous daily, weekly, monthly, open, high, low lines. Once again, candle colors at the line. Nothing earth-shattering. Just few profitable trades, you know, in the 5 to 10, 15 pip range. Because once again, we're only working with, 56 pip range for the day. And since we turned on the computer, you can see here, we had the ask come through the valley, or the peak of the bid, came through here, and then price came back the other way, right here. Bid above the valley of the ask. So right here, you would have jumped out with maybe a couple of pips, or you said, nope, my stop's up here. I'll wait it out. And you see, then you would have been rewarded with about 7 pips or so right now. Einstein line. You can see here what happened. Made a new high, came back in, scratched a trade. Right here, put in, came back here. You could have scratched, or if you waited, you probably should have exited. All this buying, why would you? It's not going down unless you get some selling. So if you got buying, it's going against you. Okay, that wraps up the week, fellow traders. I hope you had a very profitable week. And just remember, when you start trading next week or for the rest of the day, it's not what you trade, it's how you trade it. So just drain the banks.